Is this a good time to buy and get involved in the stock market? Well, in this video, I wanted to share with you 3 reasons why I think this is the best time to buy and get involved in the stock market. The first reason is because of the growth potential. Let's start with a hypothetical example. Imagine you have a stock that was priced at $100 per share. Now, if after the decline in the stock market, the value of this stock goes down to $50, that shows a decline of 50% because the value of the stock is now gone to half. Now, in order for this stock to get back to where it was, and after time, if it grows back to where it was previously, growing from $50 to $100, this in fact shows a growth of 100%. So the decline was 50%, but the growth would be 100%. And you can see why when the value of stock has dropped, in order for it to go back to where it was in the past, it has a huge run and increasingly a potential for growth. I can actually give you a real life example. One of the stocks that I trade is called UDOW. UDOW is a leveraged exchange traded funds based on the Dow Jones Industrial Average. So this stock was trading at around $137 per share about a few weeks ago at the market highs, and it was at the all-time highs. And recently, the stock was hammered, and the value of it went down all the way to around $30 and some change. This huge drop was almost equivalent to a 70% drop in the value of this ETF. Now, just imagine for a second, if the value of this stock, and it was traded today as around $44, if it was to go back to its original price of highest price of 137, it's not actually growing by 70%, but rather it's growing by 211%. That's just a huge run for stock, and it's just thanks to the mathematical calculations involved when it comes to drop in the value of price as well as the value of the price going back. And really, it's more of a fundamental question. Do we believe that the Dow Jones and the American economy has the potential to recover from this recent market crash and recent market declines and get back to where it was? I, for one, do believe that, and that's why I think a stock like UDA in the long term has a good potential for growth. The second reason why the market decline is a great opportunity for you to buy more stocks is to take advantage of the dollar cost averaging. So dollar cost averaging in a nutshell refers to buying the shares of the companies and buying the securities, whether it's exchange traded fund, bonds, or different equities such as REIT at different prices. And over time, as the prices may drop, you continue to buy more of that share. This way, you're bringing your average price lower and taking advantage of what we call dollar cost averaging. One example that I could share is the stock of Boeing. Boeing obviously is a aerospace and defense company, and the shares of Boeing was trading around $350 before the recent market declines. And suddenly, over the span of the last 1 to 2 months, the stock got hammered, went all the way down to its low of around $90 or $95 US. So this, from a dollar cost averaging perspective, could present a good opportunity for you if you believe that Boeing is a company that can recover, has strong fundamentals, and from a technical perspective has the opportunity to recover and bounce back. And this is in fact what happened. So imagine if you had purchased one share of Boeing at its all-time highs, $350. If it went down all the way to, say, $100, if you even at that time bought one share, you're bringing down your average price of the Boeing. By buying one share at $100, now you own 2 shares of Boeing company. The total purchase price for you was around $450, and the average for that would be roughly around $225. So you brought down your average price for the purchase of Boeing share from $350 to $225. So which is why if the value of stock goes down, if the company has a strong fundamentals and you believe that it has a strong moat, the company has strong management, the type of work that they offer, the type of services they offer is not something that can easily be replaced, and they have very good margins in terms of profitability, and they have a good balance sheet. They do not have a lot of debts, and they have enough cash flow to survive difficult market declines, such as the ones that we are in, it would be a good time for you to buy more shares of the company. Now, Boeing is a unique case because we know that the company has a lot of debts on its balance sheet, and it's definitely is the one that is currently struggling. That said, given the duopoly that exists in the aerospace market with Airbus and Boeing is the two major players in this market, and anticipating that America would not let Boeing company to go bankrupt, you could probably expect the stock to bounce back at some time soon. Now, when it comes to stock market, there is no guarantee. So even if the stocks goes all the way down, you never know whether it has already bottomed or is it going to continue to fall lower, and even at one point it might get even to zero and you might lose all your investments. But it's really depends on your knowledge of the company, the research that you do, and how much confident that this company has the potential to recover and has brighter future in the several years to come. For those investors who believe in Boeing as a company and as a business that has been around for many years, if they bought the shares of Boeing when it hit its low of 95, they were pleasantly surprised and they were pleasantly rewarded when the stock rebounded within a span of a week and went all the way back to 170. For me, when it comes to stock market investing, I use two approaches, both passive investing and active investing. When it comes to passive stock market investing, I use a robo-advisor tool called Wealthsimple, which allows me to fund my account, and then the system would then use the funds to purchase some quality exchange traded funds and indexes over time for me, fully taking advantage of the dollar cost averaging. I also purchased the shares of some quality companies and index funds as well as exchange traded funds over time actively. For that, I keep track of the stocks that are attractive to me, and I have a price point in mind where I think at that point the value of that stock is a bargain, and then I pull the trigger and purchase the price at that order price that I've scheduled and set up in the system. And for that, I use Wealth Trade as well as Quest Trade. A number of those securities that I've recently purchased and I'm happy with include VTI, VUS, XIC, and ZFO. And of course, these are mostly index funds and exchange traded funds. As for the companies for which I've purchased their shares recently, I can mention Cloudera, Foot Locker, Boeing, Carnival Cruise, and Manulife. The third and last reason why I'm a buyer in this market is to build a growing source of passive income. And for that, I mainly focus on the companies that pay a dividend. Dividends are payments that companies make to their shareholders. Not every company, of course, pays a dividend. For the companies that pay a dividend, over time, they tend to increase their dividend amounts. And this is a great way to increase your passive income over time. Imagine AbbVie, which is a pharmaceutical company. Back in 2016, they were paying roughly about $2 in a year in dividend amounts. And at the time, their stocks were trading around $45. And now fast forward in 2019, they're paying about $4 in dividends, which shows that they have almost doubled their dividend payment within the span of 3 years only. You can see how your passive income can grow over time as companies grow their dividend payouts year after year. There you have it, folks. 3 reasons why I'm a buyer in this market and investing more and more into the stock market. Hope you found this video of value. If you did, please hit the like button and join Moementum channel. On Moementum, we post weekly videos about finances, investing, and personal development. Lastly, if you're new to investing, be sure to check out the promotion that we have right now. The link is in the description box. You can get $10,000 managed for free using the promotion link for Wealthsimple. I would love to hear from you. Leave me a comment and let me know what stocks are you buying at this time, or perhaps what stocks are on your watch list. See you next time.